Global markets are up on Tuesday as investors wait for a string of central bank moves aimed at tackling surging consumer price hikes. Share prices in Asia, led by Hong Kong's Hang Seng Index, has risen more than 1%. Wall Street stocks were also up overnight, ending 2 days of steep losses for shareholders. This comes ahead of what many expect will be another rate hike by the U.S. Federal Reserve. Monetary policymakers in the UK and Japan are also expected to announce higher borrowing costs this week. Inflation in Britain is currently running at a 40-year high, with most analysts projecting even faster price increases later in the year. In Japan, data released on Tuesday showed core consumer inflation in August rose to 2.8%. That's above the official target of 2%. Now, for more, let's go to Naeem Aslam, Chief Market Analyst at AvaTrade in London. Welcome back to the program, Naeem. Thanks for joining us. Now, we've seen this race by central banks all over the world to raise interest rates one after the other. Just now, we saw that Sweden's Riksbank hike interest rates by 100 basis points. Now, what are these higher borrowing costs doing to global economic prospects?
Sure. Thanks for having me as always. There are a number of points which you have touched on. Now, when we're talking about Scandinavian economies, and especially some of the European economies, remember over there interest rates being in negative territory. In simple terms, you get paid to borrow money from the bank rather than the other way around. So the aggressive or a hawkish monetary policy stance by these banks is certainly justifiable because they need to bring things back to normality, especially the fact that inflation is moving higher. So we will not see that much of an economic activity slowing down in those particular part of the world. But when it comes to back home in the UK, where economic activity is already suppressed, the consumer sentiment is absolutely dire. Retail investors are completely, they're having nightmares of their disposable incomes dissipating every single day, and then they do not have the ability to dig down into their pockets. The situation over here is extremely dire. But this is only going to become more worse with the Bank of England constantly increasing interest rate. Now, what that happens, that's going to make more money coming out of your pocket unwillingly, and the cost of living crisis is only going to become more worse.
Now, the really big central bank decision coming out is by the U.S. Fed, as I just mentioned there. Now, most investors seem to have priced in a 75 basis point hike, which is among one of the highest in the Fed's history, but there's also the possibility of a full percentage point, as we have been talking about. Is this a bit of an overcorrection by the Fed after delaying action on inflation for months earlier in the year?
You're hitting the nail on the head. These central banks, they were literally sitting like ducks, right? So they were late in the game. They made a number of policy mistakes. Now they're trying to recover from those policy mistakes and triggering economic activity slowdown. The Federal Reserve has increased interest rate by 75 basis points, by 50 basis points a number of times. Now, we do not think that there are chances even on the table for a full percentage point by interest rate high by the Federal Reserve, even though inflation is hovering at 40 years high. I think if the Federal Reserve does that, that's going to create immense amount of a colossal damage in the US stock market and, of course, the spillover effect throughout the world.
Yes, and of course, it's U.S. consumers and companies who are suffering because of this delay in action. Naeem Aslam in London, thank you for joining the program.